Good morning, everybody. It is Tuesday, January 17th, just after 6 o'clock in the morning, and it's Taco Tuesday. Taco Tuesday. Tuesdays, traditionally, for all those new guys, it is a day that trends over history, recent history, that it likes to be a down day. It likes to be the day when we sell off. And if you do look back, you can see that you get your lows tend to come on the Tuesday, just like last week. I'm doing a little bit different today. I'm just going to run through the email with you because I've covered so much over the weekend. Today's lineup: the World Economic Forum begins today. So not only are you going to have major financial Fed heads that are speaking, but you're also going to have major uh, contributors to the Global Economic Forum, which is, your Jamie Dimon tends to be a traditional member there. Once in a while, you'll get somebody like Bill Gates, and it all takes place in the mornings, Eastern time, because it's happening over in uh, in Davos. Uh, Davos in the Philippines. Um, so you can get a little bit of a reaction, something similar to like what we had on Friday. Tonight is the Bank of Japan's interest rate decision. Now, they have not raised rates. They still have negative rates, but they have begun the QE with bond buying. And if you remember back a few weeks ago, major move overnight taking place because of what they were doing with the bonds. So, something to be very well aware of. Tomorrow's schedule, tomorrow morning, 2 o'clock in the morning, you've got UK CPI. Then you have the Euro CPI. Then prior to the open, we have the US PPI. And then right at the opening bell, we've got Fed's Bullard. So I need to remove that. Markets closed on Monday. I'm sitting in position of January 20th, 395, and January 27th, 395 puts. Now, I do have the 390s and 385s for this week that I bought last week, and those are basically worthless. Those are wipe offs. But I am, again, looking for a dip, simply a dip, and that dip to be looked at very closely to be bought. Hang on one second. Excuse me. Trade of the week, looking for a minus 4,000 close on Friday. A very aggressive look is right there at that strike, 4,005, 4,000. Right around 250-ish is where the credit's at. It's at 230 this morning, but obviously we've got a 10-point cap down. Gaps fill. That's what they do. So considering that you've got that gap above to fill up at 399 from where we closed on Friday, there is a very good chance that during the course of this week, we will get an opportunity that that gap will be filled. So if one wanted to sit out and wait and try and get better credit, again, this is simply a guide of what I'm doing and what I'm looking at. This Friday is OPEX Friday. OPEX Fridays are very large, they're very intense, and the contracts for OPEX expire prior to the opening bell on Friday. What I showed you on the weekend there's a major straddle of about 150,000 contracts. That's where all the volume is. They have 150,000 4,000 puts. They have 150,000 4,000 calls. So they're playing both ways. And again, on this, what I'm looking at here with my trade of the week being the 4,005 4,000s, these can be adjusted. You can adjust it any way you want. You want to use the highest close since we fell out of 4,100 at 40.20? Go ahead. 40.25, 40.20. You're getting $1.80 this morning. You want to use the December 14th high of the day, that 40.53? Go ahead. You're getting $1. $1 on a $5 spread. That's $4 at risk. That's 25% on your money if you were taking a trade like that. So, again, but going through, this is where we're at. As you can clearly see when you look back at a wider zone, you've got this resistance right here, just up a little bit higher than where we pushed to on Friday. So, again, my view is that we will have a little bit of a turn down, cool off the charts. 4 hours are overbought, like I showed you, and a few others. Questionable if we do break below that 39.08. If we do break below that 39.08, I don't expect us to break below that 38.55. If we do, for whatever reason, have a move down back below that bear market line, the bulls are in some serious trouble, and it will be a very large fight over on FinTwit. What I'm looking at mainly for the early portion of the week is the Friday pre-open 40-point drop that recovered. It's right down there at SPY 393. That's my main meat and potatoes that I'm going to be looking for. You can see over here on the left of that, that's the CPI spike when CPI came out on Thursday, and we were spiking up, spiking down, spiking up, didn't know what to do, and then we carried on into our session. So looking at that 393 level and questioning whether or not something takes place at that 393 level. So, again, it's a game. As for today on SPY, like I'm saying, we've got about a 10-point drop down. We got 40-40, 39-30 as our edges. Same thing as double the implied move. So I've got the safe edges posted here. If you wanted to play the edges, as of right now, they're only 30 cents and 20 cents. You're still able to grab your 5%. The risk trade for today is that we close red, that we close below 4,000. That's the risk trade. This was also the Friday's pattern day trade rule trade for those that couldn't do any day trades. As of this morning, it was getting around $1.75 credit. That's a 54% return on your 325 risk. And I do have a PDT trade for January 18th, should somebody want to be taking something and holding it overnight, where you're selling the 4005 calls and you're buying the 4010 calls for January 18th. That's getting $1.95 credit, which is around 64%. Now, when you get into these things, you get into them, and I always go in with the understanding that, okay, so if this goes against me and I need to roll the trade, do I have some space in my account that I can roll the trade? And what you'll find most of the time, if that ever does take place, that because you are getting a decent credit already, you don't necessarily need to widen your strikes. And sometimes you can still collect a little bit more credit moving it over, rolling it over to the next day, and then the next day it winds up taking place and giving you the full credit. When I post these trades, I'm looking for what is going to come out there and be full credit. No need to go out there and trade and close the trade. End of the day, it's going to expire. It's going to be completely worthless, and you're going to be able to take full credit. Thus, if you are in this and you are looking for that 5%, 10%, 15%, 20%, 25%, and you're just looking to scalp that money out of it, by all means, I am not holding a gun to any of your heads. You don't even need to take the trade. You can sit back and watch it. But right now, what your major problem is going to be right now is going to be that 200-day moving average. The 200-day moving average right here at SPY at 397. So I can pull it up on the SPX, but it's pretty worthless because SPX isn't trading right now. Any dip below that 200-day moving average, we're immediately going to be looking at that 5-day moving average to be support right here down around 394. You got the Friday low right here, 393. And then below that, you've got the 50-day moving average. So again, not being aggressive looking for a major move to the downside, but am definitely looking for a dip. Want to see some oversold charts, want to see that there's going to be enough energy in those charts and in those time frames that when we do come up, I'll show you here. When we come up to that trend line there, which is coming off of your highs, that falling resistance line, we have enough energy that we can break through it and then start making it support. If we go back to it and we tag it and we fail on it like we have done 5 times, the bulls are going to be everywhere underneath what every bear is out there tweeting about because you have failed once again. So watching that right there, watching this 39.45, watching that 39.20, 39.30 area, which was our support back in December, that 39.18, 39.20, 50-day moving average, obviously right there to hold you. Got that 39.08. So that's what I'm watching for the course of the week. See you guys in the chat room.